Good day, ladies and gentlemen. So in this video, I'm going to be teaching you how you can actually predict where the price is going to in a day with up to 90 to 95% accuracy. Okay, so you need to actually pay absolute attention to this video. So what does having an idea of where price is going to help you do? It helps you form a bias. Very, very important. Okay, so it's good to trade with a bias, and that bias should come from a higher time frame. So I'll be teaching you this on the daily time frame. Right now, this is Eurocard, and this is the daily time frame. So I'll be teaching you how to actually form a bias from the daily time frame and to know where price is going to with an accuracy of up to 90 to 95%. Okay, so without further ado, every candle is actually a range. Okay, meaning it's gonna have a resistance level and a support level. Okay, so it's gonna be like a boundary. Every candle forms like a boundary, okay, which is what I call a range. All right, it's gonna have an open, a close, a high, and a low. So let me start from this particular candle down here. This is the daily time frame, like I said. So I'll start with this candle right here. Okay, so I'll place two horizontal lines on the highest point of that candle and an horizontal line at the lowest point of that particular candle. So I'm zooming in to ensure that I'm placing it correctly. Okay, and then the lowest part of that candle is right here. All right, that's the low of the candle. So what do? You wait for either the top or the bottom of this boundary to get broken. Not just broken, the candle has to break and close either above this level or below the level. Okay, so there must be a break and close above this level right here. With there must be a break and close above this level or a break and close below this level for you to form either a bullish or a bearish bias. So if a candle breaks and closes above the boundary, it tells you that you are absolutely bullish, and should be looking for bullish setups. Okay, since the higher time frame is telling you that there is an upwards movement in the market. Okay, upward momentum in the market. So you can see right here, this candle broke and closed above the above the boundary that we created. So that tells us that our sentiment or bias should be bullish. Okay, so during the week, if this happens to be a Monday candle and this is Tuesday candle breaking and closing above, it should tell you that from Wednesday you should start looking for an opportunity to buy. So that's going to give you an idea that okay, the week is going to be bullish. All right, so what do? The following day, being Tuesday, you mark out the boundary again. Okay, so now that you have marked out the boundary, the previous exercise you did that helped you form your bias, let me tell you the information that has provided you with. That has provided you with the information that this low that was formed here is going to be protected. Protected means price will never ever come and go below this low. So it's going to be protected. The liquidity level price we want to seek is the liquidity level above this our boundary. Okay, so whatever drama price wants to perform, it's going to come above this. This is the liquidity it will be more interested in taking other than that below. Okay, so having that in mind, you are going to be looking for setups when Wednesday starts. Okay, that's assuming the first candle was Monday and the second candle was Tuesday. So on the third day, you should be looking for buy setups. And let me quickly explain something else that can help you, pinpoint your entry positions. When a candle opens, when a bullish candle opens, most times it does something. It moves downwards first, then it pushes up to form the bullish body. Okay, so when the new day opens, you are waiting for candles to at least push down a bit. Though there are some candles that will open and will not move in the opposite direction, they will just start moving in their major direction immediately. Okay, so whatever the case is, you want to look for an opportunity whereby you can actually join a buy trade, not a sell trade. You can enter a buy trade and your major target is going to be the liquidity resting above the level, okay, above the boundary you created. Now, since the third candle also broke and closed above that level, that tells you that you are still bullish. So you simply place a boundary for the next candle. Okay, place a boundary right there. So what does this tell you? This is going to give you the information that this low will be protected. Just be looking for an opportunity to buy. Okay, as you can see, when this candle opened, it moved down a bit. All right, definitely on lower time frames, you will see either an order block or a fair value gap that you can use to enter a buy trade. Opportunity is going to be presented. So different entry models can suffice. Okay, you can have an order block entry. You can have what's it called? If you don't have an order block entry, you can have a fair value gap entry. All right, so you join the trade in order to move in the upwards direction. All right, so as you can see, what do you see happening right there? Look at what the wick of that candle did. It swept the liquidity above that boundary, showing you that price will be interested in taking the liquidity above and not that below. Okay, so since the next candle also did what was also bullish, it means our sentiment is still bullish. So I'll place a boundary right there, place a boundary this way. What do you see happening? The next candle also cleared the top part of the boundary. Definitely on lower time frames, you also have entry opportunities. It could be another block or a fair value gap, which you use to enter on lower time frame, maybe 15 minutes, okay, time frame, in order to come towards the top of this boundary. Okay, so we are still bullish. Let's draw the next boundary. What's the next boundary? Let me move back a bit. Okay, so the next boundary right now is this. Okay, this is the next boundary. Where do you think price will go to? We are looking for price to actually move towards the top part of this boundary. As you can see, price opened, pushed down a bit. Definitely is going to give you an entry position which you take advantage of to move to the top. But now you need to start slowing down. What do you notice? The candle is no longer closing above the level, so you need to be wary. That is a sign. And what sign is that? It's telling you that the bullish sentiment is reducing. The bullish sentiment is reducing. Okay, so you can see it's now sweeping. It's no longer running the liquidity by closing with a candle body beyond the level. So you place an horizontal line above it and an horizontal line on the next candle to form the boundary. Okay, now since this one, let me take it back. Since this particular candle, alright, since this particular candle did not close above, since this candle did not close above, that signals the end of your bias. You no longer have a bias. So it is wrong for you to come and draw a new boundary on this next candle and be waiting for the top part to get taken out. You're already doing the wrong thing, because the former candle did not give you, as in a bias was not created. Okay, the reason why we could keep entering buy trades was because the next candle was always breaking and closing above. Okay, so if it does not close above, then you need to be wary. Okay, you need to think twice. All right, and probably slow down until you start getting clear signals of the direction where price wants to go. Okay, as you can see, this candle did not close above, so we draw the boundary for this next candle. And we are not drawing the boundary in order to take a trade. No, we are taking the boundary now in order to try to get a bias. So we want to see if it's going to break and close above or break and close below. Now the next candle did not break and close above, neither did it break and close below. No bias, no trade. So we use the next candle as a boundary. This is the boundary of the next candle. Okay, now I have the boundary of the next candle, which is this. But you would notice that the following candle again did not break and close above, neither did it break and close below. Okay, so it closed within the range. Closing within the range tells you what? Tells you that we don't have a bias and we are not going to be trading. So the next candle becomes your what? Becomes your range. Okay, so this becomes your range, and since it's your range, you're actually going to be looking to see if there's going to be a break and close above it or a break and close below it. So what do you see happening? Price wicked above it, went downwards, broke and closed below it. Okay, so since it broke and closed below it, what do you think is going to happen? Our bias is now bearish. Our bias is bearish. So right now we're going to be looking to do what? To sell the market. You're only looking for sell trades. So you draw out the boundary of the candle this way. You draw the boundary of the candle this way, and then you wait for price to actually give you a setup on this particular day, and that setup is going to come and clear the lower part of the what? The lower part of the boundary. As you can see, it has already gotten to the lower part of the boundary. Okay, do you see that it has already got to the lower part of the boundary? So a setup must have happened on the lower time frame, which you can actually utilize in order to move lower. Okay, so our bias right now is bearish. So this is a way that you can actually use to, have an idea of where price is going to. You have your boundary. It's either going to clear the top part or the bottom part of that particular boundary. All right, so if you got value from this particular video, you learned a thing or two, please turn on the notification bell and also hit the subscribe button. You can share with your friends, so that they can also learn something from this particular video. Okay, that'll be all for now. I'll see you in the next video. Thanks for watching.